Hello, everyone. Francis, I'll hand it over to you to kick us off.
Excellent. Thanks very much, Jabron, and welcome everyone. So really looking forward to session today. We've got some very insightful speakers and some great companies that they're representing. So looking forward to hearing a diverse range of perspectives on an area that I'm sure is close to all our hearts, and something that continues after, I think, I've been in profession for over 20 years, but something that we're still grappling with. And I think the challenge and the nature of it has changed somewhat, but we're still very much in a place in most organizations. And certainly as you scale, the complexity seems to scale as well. So I think it's a common source of challenge, and something that we can really help each other to unpick. And understanding a diverse range of views and potential solutions is a really good way to approach simplifying some processes that have evolved to be complex and potentially having a negative impact on the organization as a whole. So before we go into that, just wanted to do some introductions. So I guess just starting with myself, I'm a director in BDO in the UK. I drive our national controls team. So it's around 120 people that I'm responsible for in relation to supporting clients on everything from sort of process and control optimization, regulatory requirements, whether that's US SOX, and actually at the moment spending a lot of time on the UK corporate governance reform, the new corporate governance code and the internal controls declaration, which exists across very much financial controls, but also interestingly, and that's the kind of departure from US SOX, across both sort of operational reporting and compliance controls as well, which creates a really interesting challenge and opportunity for finance communities, and is really sort of in the center of this topic as well. I've been in BDO for 3 years, and I spent some time in PwC previously, and also worked as a head of risk and control in Liberty Global. So it's an area that I've been close to throughout my career. I'll just hand over to Robbie, if that's okay, Robbie.
Yeah, of course. Thank you very much, Francis. Just to introduce myself, Robbie Hadfield here, Director of Solution Engineering at Payhawk. My background personally, I've been a head of finance, financial controller. I used to work for a subsidiary of Sony, and then a few startups since then, before transitioning over to Payhawk. My day-to-day is kind of speaking to financial controllers, CFOs, head of finance, and always looking to automate a lot of their accounting processes. And I'll give a brief introduction to Payhawk as well. Payhawk, we are a spend management solution. We focus on company cards, expenses, as well as accounts payable, and then integrating those into your accounting system. Thank you, Francis. Back to you.
Thank you. And Andy?
Yes. It's great to be with everyone. My name's Andy Lampert. I sit out of our Denver, Colorado office. A little bit about me. I have also a quite technical accounting background. I started my career in audit for about 3 years, where I earned my CPA prior to going over to more of a consulting role. I like to joke that I got to play controller across many different organizations, a lot of pre-IPO SaaS companies, and then some biotech sprinkled in there. We'll kind of introduce Netgain a little bit later, but really our whole MO is technical accounting resources directly within your ERP system. So I'm really excited to be here and kind of dig more into that in a couple slides.
Great stuff. Thanks, Andy. And Jabron, do you want to give a background on yourself and Kolleno maybe?
Certainly happy to jump in here. But hi, everyone. Excited to be on the call. My name is Jabron Larrabeer. I'm Chief Financial Officer of Kolleno. We are a B2B financial operations platform that helps to support clients by connecting to their accounting or ERP systems and helping them with their AR processes, workflows, payments, and reconciliation process. And we'll talk a little bit more about that as we go through. But I've been with the firm for just under 3 years, and prior to this, spent quite a bit of time at one of the big four in a consulting capacity as well.
Great, thanks, Braun. Okay, so just in terms of setting the scene, and I think this is probably an area that we're all familiar with. I've called out on the slide the key challenges with respect to complex accounting processes and how we can expect tech to help and enable with addressing these challenges. We see very often across companies of various sizes challenges around heavy manual usage, and a huge amount of sort of Excel reliance still that acts as a kind of plaster across a lot of that sort of manual processing that exists, especially between different systems. So taking data out of, say, your AP system and putting it into your ledger, or taking data out to perform FP&A type activities and putting it back in. And these sort of highly manual processes are just fraught with error. And we do see, it's very high profile instances of this, not least with companies making large payments. And I know Citigroup was in the press a few years back for making multi-million-pound payments incorrectly, and there's very few clients that I've been involved with where duplicate payments hasn't been an issue. So this root of that really comes down to sort of the manual element, and especially where there's high volume, there's a real risk that things will go wrong, and we know that human error exists. So mitigating it in a preventative way is definitely the right way, and that's where technology really provides some great solutions, and especially with the recent crop of SaaS systems over the last 5 or more years that really sought to address these problems in a quite agile, dynamic way. The other sort of main issue we see with this complexity is a decentralization of data. So understanding one version of the truth is particularly difficult. CFOs, probably spend a lot of time banging their desks, struggling with understanding a consistent version of truth, because depending which system you query and how that data is sliced and diced, you can end up with lots of different versions of the truth, and that really does have poses significant challenges, not least in terms of efficiency, because it slows down decision making. It reduces the confidence of the users of that data, and those stakeholders, and ultimately, that can have a material impact on the business. That could be as bad as making the wrong capital allocation decisions, or reducing the faith of the stakeholders in the robustness of the financial data that's being reported, whether that's to the markets, or to suppliers, or to customers, or to employees. So there are some real challenges with some real potentially bad outcomes that are driven really by what are quite simple sort of manual processes, and can be simple sort of fat fingers or transposition errors that drive quite significant issues downstream. And so this challenge is not only an efficiency one, it does drive quite a lot to do with reputation and real company value. So how can tech help? There's a utopian element to this, but on that journey, you also have absolute marginal gains. So simplifying your processes we all know the organization, and you know that certainly within finance function should be supporting the business, right? We shouldn't be changing the organization just to make finance departments' lives easier. Having said that, having a simplified process does help the organization operate more efficiently, have clearer information in order for operational decisions to be made, and make the responsibilities of those not in finance clearer to not only undertake but then to have transparency and see. So simplified processes are easy to sort of write down on a piece of paper, but they're harder to enforce, and that's where tech really helps with driving that enforcement, and keeping people on the guardrails, on that whole people process technology paradigm. The technology is great for keeping things straight. So that's one thing we can really hope for. Obviously, increasing confidence in the data, and that data being more reliably or consistently reliable. I think, yeah, as I touched on that, so it's becoming more and more relevant, especially in, you know, times where the economy is not doing as well, and some of the business models that weren't previously challenged are being challenged, and the confidence of the numbers on that on the quality of that financial data is being challenged more than ever. Being able to be confident in that data that's been output is extremely important. And then ultimately, it allows the effort and time that finance teams to this day spend running around with spreadsheets, doing potentially quite administrative, repetitive work, to instead focus their time on more value add and more insight, which gives significantly more value to the business, and is ultimately what a finance function should be doing in terms of supporting the business to make the right capital allocation decisions. And so that's the sort of background, certainly from my perspective, from a sort of professional services looking across clients. I think I'll now hand over to Robbie to discuss some of the challenge that he sees from his perspective, zooming in a bit more into the AR management process.
Thanks a lot. Thanks a lot, Francis. I know we'll be jumping into some of the use cases. I think, you know, one of the key points that you mentioned is just around the complexity around some of the pre-existing processes, and talk a little bit about what tech can enable. I think one of the elements, you know, after speaking with a number of different clients, you know, across industries and finance teams specifically, I think one of the key challenges that a number of them face is really around their AR management process. You know, if we kind of hone in on that, it's essentially, you know, how do we make sure that we have the latest information available to be able to improve how we manage our receivables, and how can we kind of optimize those processes as we go forward. And I think, you know, oftentimes when we take a look at, you know, just for example, the invoice to cash process, you know, I think some of the barriers that we see with clients is around like legacy non-automated processes. So a number of finance teams that are still using, you know, Excel and manual decentralized processes, and often paper-based invoicing. You know, and so as they're going through this process, you know, they note a number of different challenges, you know, whether that's, you know, human error in the earlier parts of the process as they're, you know, putting together the invoices, issuing the invoices, trying to follow up on the invoices and keep track. You know, as you go through the process, you know, undergoing time-consuming manual reminders and chasing. So, you know, having people, you know, on the team actually, you know, pick up the phone and spend a number of their a quite considerable amount of time, you know, chasing late payments, you know, and then having, you know, disaggregated data that's really providing, you know, lack of visibility into what those overdue payments are, some of the missed tasks, and really, you know, troubling their businesses and taking away from their ability to really focus on, you know, their how to optimize their cash flow and how to optimize their businesses. And then I think, the other element that we talk about is, through this process with our clients is really some of the challenges around non-digital payment methods. So some of our clients still utilizing, checks, or still receiving checks, which requires, more time and adding more friction to the payment process for clients. And so, taking a step back, I think part of the conversations that we have often with finance teams is, how do we continue to optimize this process? What can tech enable to help optimize this process, streamline this process, and enable them to really focus in on, higher value tasks? And so some of the use cases that we work on is helping our clients, think through their strategies for optimizing their accounts receivable management processes via technology. And so that means, being able to integrate automatically with an accounting or ERP system, pulling all of that data into a central location, and then through the platform, being able to help assist them as they continue to follow up with clients, receive digital payments, and go through reconciliation. And so, what we find is that this automated process helps to really streamline their workflows, and it helps to really save time. So what we will often see, through this, and what it enables is this simplicity, right? The simplicity for, finance teams to really digitize and expedite the invoicing process, enable them to get, greater accuracy and centralization of all of their data. The ability to really automate workflows, be able to send more personalized and multi-channel reminders. Because I think, and this, Francis, is a point that I know that you and I have talked about, is really the changing role of finance teams and how that's becoming a lot more external facing, right? And so this is enabling them to utilize technology to send more personalized and multi-channel reminders to clients, stay on top of their late payments, and providing them with greater accuracy. And then I think, finally, it's able to enabling them to save time by allowing them to offer digital payments and tailor options, really to focus on their clients and help to simplify and increase the accuracy of the reconciliation process, and remove a lot of those frictions, that in past have really created complexity around the process. And so, from an AR management perspective, this is certainly a use case or an area that we see, significant potential, where tech has enabled, a lot of our clients to succeed, to be able to optimize their cash flows, improve their cash flows, improve their operations, and save time to really focus in on their businesses. And then, Robbie, I know you'll be touching on spend management, which is definitely another use case of an area of complexity that, when we're having conversations with our clients, that they keep on raising as well. But Robbie, I'll hand it over to you.
Thanks very much. So yeah, I think one of the really interesting things I find with finance now is your options for how you build your finance tech stack has massively changed. The ERP is still the backbone. It always will be, whether that's NetSuite, Business Central, SAP, whatever it is, or even the smaller accounting systems. But fundamentally, due to APIs, you've got a lot more flexibility to bolt on best-in-class solutions. You've seen an example with an AR use case in a moment there. There are other use cases as well. For Payhawk, one thing that I'm conscious of is employees can get very scared of using the ERP system, especially if you're using it for something as simple as expense management. And what we find is you can actually build in best-in-class solutions and bolt it onto the ERP. And then you're really balancing two things. You're balancing, one, the governance and control, the complexity of the ERP system, which is driving reporting, etc., whilst also giving a really great user experience to the employee. And this is where, with a personal anecdote side of things, I really find that one of the blockers to finance and non-finance engagement for that business partnering element is actually the finance tech stack. If you can remove that barrier, you can really change the relationship between finance and non-finance. And here's just an example. Payhawk, we give that employee user experience to the employee, make it really easy to deal with their card transactions, their employee expenses, their accounts payable. those transactional processes, and let the ERP do its job well. Consolidation, and then building the reports for the board meetings and management accounts, and then the stat accounts. Thanks very much.
Thanks,
So
Robbie.
yeah, just the benefits there, which I just highlighted, kind of referred to those a moment ago. You're getting the governance and control, you're getting the automation, but you're making it easy for the employees. So you're trying to achieve that best of both, and then finance and non-finance start getting on a bit better, hopefully.
And do you have any sort of the point I think you made about sort of employees, you know, taking to sort of being more comfortable? Do you have any sort of feedback from how that sort of translates to how easy it is to embed in the organisation, and sort of uptake with the seamlessness of training, etc.?
Yeah, it's a really interesting one. It changes the culture very quickly, because
Sure.
expenses in particular is something everyone does in the organisation at the same level, pretty much. So it is, as soon as you bring in a new tool, you see actually quite a seismic change of how the cost control culture in the organisation is established. And something I always found as a financial controller, head of finance, is the best performing functions in the business were always also the best ones on their expenses. It was always a leading indicator. If a function started going downhill on its expense management, typically they were also the ones that missed their targets. There you can think of that in your KPI reports, guys, if you want that one. Expense leaderboard was my favorite there.
That's excellent. That's an absolute gem. I've never heard that before, but it sounds like someone should be writing a sort of MBA dissertation on that.
Okay.
Great stuff. Thanks. So should we pass over to Andy now?
Great, thank you. Yeah, and I think we're hearing a lot of different kind of angles we can come at this with leveraging software and how we're working within our ERP or maybe outside of our ERP with those APIs. And that's no shock, kind of where Netgain comes in as well. Less on that operational side and really on that technical accounting side. So I think in the past, we have assumed, especially as a lot of us maybe went through the lease accounting this last couple years, where we were having to employ really technical accountants to help us make sure that our books are in line. And that's where Netgain kind of came to be. Our whole goal is to empower our accounting teams to be able to use that software efficiently, speed up our processes, whether it's month-end close, tracking our assets, and getting out of the spreadsheet. So we can go to the next slide, which kind of highlights all of the things we do, but I wanted to hone in on asset management, as I just kind of assumed that's something maybe a lot of us could understand. So we do have functionality, as mentioned, across like leases, whether you're on the lessor or the lessee side. We optimize loan management. We have some really great options for our close management, and then shared transactions if maybe you're like allocating over different subsidiaries or segments. But net asset, kind of taking a step back to when I was in that controllership role, my client, we had not only were we in Excel spreadsheets, we had actually leveraged an ERP fixed asset module and then realized it broke and had to take things out of it. So we're working across about 3 different functions. And so seeing kind of where things can break down and then coming and seeing where things can work really well. So I think you've heard it now 3 times from all of us, but taking the manual work out of the team's hands and making sure we're not getting that human error aspect, and really leveraging our ERPs and making them work the way they're supposed to. So Netgain, we are a native NetSuite suite app, but we also have some functionality outside of NetSuite with our lease tool and then our asset tool. So we work really well across ERPs with kind of a specialty in NetSuite specifically. But I think, as you've heard here, we're big proponents of just optimizing that software, making sure that you're gaining some of that time back, making sure you're focusing on things that really matter to the company and hitting those marks. So that's kind of where Netgain comes in on that technical accounting side.
That's really helpful, Andy. Thank you very much. So I guess just moving into a sort of bit of a moderated discussion phase now. Now we've got sort of the background of the different tool sets. One question I'm sort of jumping out at me, and coming to the I guess quite the practicality side of things initially. Obviously, your solutions bolt on to existing leading edge infrastructure that exists, whether that's SAP, NetSuite, Business Central. What does that sort of bolt-on process look like for each of your solutions, and what would that look like in kind of practicality, and what are some of the factors for sort of success in terms of the sort of starting point of the organization for that? Maybe start with you, Andy, since we
Sure. Yeah, so as mentioned, kind of where we shine is going to be in the NetSuite space. So everything is going to be native. So unless you're really a part of that sales process, you may not even know you're working outside of that NetSuite scape, which is really nice, obviously from a security point of view, but also having just users being comfortable with it. We do have some functionality outside of NetSuite if there are folks on this call who maybe don't have NetSuite. So our lease accounting tool, we do have that as a standalone. So a cloud-based solution, and we do have our asset tool also coming to market within the next 6 months to a year. So we're very excited about that. But yeah, it's great, just right up on your dashboard. You're not leaving the site, you're not logging into anything else, which our users find very useful, especially as you're posting those journal entries or modifications or what have you.
Yeah, excellent. And maybe Jabron, in terms of Kolleno, that sort of bolt-on process or the interface.
Yeah, and so I think one of the things that our users appreciate is that we've got a number of different integrations. So with whether it's with QuickBooks or Xero, your accounting system, or NetSuite, Business Central, etc. And so we try to make it as simple as possible, right? I think simplicity is key. To make sure that we're able to effectively integrate with those systems, and then being able to pull the information and data and really have it centralized. Because I think some of the challenges that we often hear is how do we make that process and that connection as simple as possible? How do we make sure we're able to centralize it, but also how do we make sure that that's a seamless integration between the two, that the information is being shared kind of seamlessly across the board. And so, I think that's been top of mind for the team in what we've done and what we've done with our clients. And I think, if we talk through things, like payments and reconciliation, which I think is a really key challenge, is also being able to help simplify that, right? Help offer like digital payment channels and help provide that seamless reconciliation that then feeds back into those systems. So I think it's all about making that connection as clear and as seamless as possible, and ensuring that it's continuous across. And I think that's been the key for us.
Understood. And Robbie, from a Payhawk perspective.
Yeah, of course. So we have a number of integrations as well. So NetSuite plus the others have been mentioned. Additionally, we can also bring sort of Payhawk data into the accounting system through uploads. However, ideally, trying to do it via API these days. I suppose the fun of the Payhawk connection to NetSuite is the 20-minute barrier you're trying to hit, whether you can get it done within the 20 minutes or just over. It is a plug and play, it's a sweet app, but recognizing there's a lot of configuration elements and master data elements. So in Payhawk, there's a lot of master data where NetSuite, for instance, and replace that with whatever accounting system you're using, is the source of truth. Chart of accounts, custom fields, and the 5 ways of doing it in NetSuite Plus. Synchronizing all that data in an efficient way, bringing the employee data from the HR system, the starters and leavers element, and then ultimately it's making sure you use the proper transaction types in the accounting system. You're not cheating with journals. It's proper transaction type, proper accruals concept of accounting, including amortization schedules, etc. So, but yeah, the NetSuite integration for us, did one this morning. It was 18 minutes and 35 seconds. But yeah, I mean, slightly made up, but it was actually within the 20 minutes without my waffle. So there you go.
Wow, that's fantastic. Yeah, that's extremely quick, and really shows how compelling this kind of structure to building your finance estate and infrastructure is. Okay, so just coming out of, I guess, a bit of the weeds, and that's definitely my fault, to thinking more holistically, and it's pretty amazing that we've got sort of 33 minutes before into a call without talking about AI, but I feel like we might now stumble into it with the sort of first question I had around sort of emerging technologies, and sort of thinking from your perspective, which emerging technologies do you think are going to have the biggest impact for financial professionals in the coming years, in the immediate future? So I might stick on you, Robbie, if that's all right, given you're on a roll.
On a roll. Yeah, emerging technologies, I'll look at this from two perspectives. I suppose one is slightly from Payhawk side of things, and then two would be with my other hat on if I was head of finance still. So for Payhawk, it's all around automation, and it's all about how can you get the data entry automated as much as possible. Employees are not trustworthy generally when it comes to account coding. I think that's a pretty safe statement to make. And if you can make sort of automations, rules, data validations, you can really actually solve sort of data entry issues at source and ultimately improve your reporting. So that's probably on the Payhawk side. When it comes to sort of, with my other hat on, I'm really interested to see sort of how automation, sort of emerging technologies around project accounting and a lot of the new accounting standards, especially sort of lease accounting is relatively new, moving into the financial instrument standard for the expected loss provisions. There's a lot of things in month end which are still manually journaled, which I don't think they need to be. And this is where I'm coming from a world where I used to run 100 million revenue business on QuickBooks Online, and it was 85 manual journals a month. And that was a lot of IFRS 15 or ASC 606 revenue recognition journals under project accounting and performance obligations. I wouldn't mind having some of those evenings back, frankly. There were some sleepless nights in there. Maybe I'm looking a bit older than I actually am after these experiences, but yeah, some sleepless nights without having these technologies automating month end and those transactional processes gives you more time to focus on the value add stuff.
Exactly. I think that's the key point, right? It's distracting and reducing the ability of the organization to focus on the value stuff, but also then to look ahead and improve it. There's so much that inertia that's created with that much manual activity, leading to an intransience. Andy, do you want to come in on that?
Yeah, no, I think Robbie hit it on the head. I think a lot of times when we're thinking about AI and just automation, people get very nervous about losing, headcount and losing, oh, we don't need the general ledger accountants. And I've seen it very opposite on where it's a huge value add. So kind of back to my anecdote on my consulting day. So we were running, like I said, those fixed assets, and we had an entire accounting manager that his whole job was to manage a workbook and our legacy asset management system. And he would complain every single month about what a headache it was. And Robbie, he had his sleepless nights looking at the depreciation schedules and what came online, what came offline. And when we were able to empower him with a tool to automate that, he actually was able to move into a finance position, which really aligned more with what he was interested in. So that could have been a churn of an employee who was miserable in a role versus freeing him up to kind of investigate another area that aligned better with his career goals. I think AI is the same thing, where no one, for instance, lease abstraction is a huge kind of area we're seeing AI show up, or flux analysis. People don't like to get into the nitty gritty of when was my start date, when is the payment, and if we can abstract that and put you 5 steps ahead, well, now we get to do something more impactful and more interesting instead of just cleaning up month-end close every 5 seconds we have because something went a little awry. So I think it's a huge value add. And I'm excited to see kind of where accountants get to discover new interests. And maybe we get to use that as a recruiting tool, because I'm sure we all feel the pipeline is a little bit dry right now, where you don't have to start your first 5 years, doing the GL accounting. You can really get more of a holistic view on things.
I love that element of upskilling your existing finance team. So through automation, giving sort of more opportunities to existing finance team members. I love that idea that it's not a threat to headcount in transactional roles. It's actually an upskill opportunity that we're giving finance folks, and ultimately making it a much more fun profession to work in, where you can have much bigger impacts. I love that. I love that idea, Andy.
Yeah, and I would add to that and say, it's very much when oftentimes when we're having conversations with clients, we talk about it very much as a bit of a journey, right? It's kind of starting out, taking that initial step, to be able to take that step forward as you're starting to digitize your own kind of operations, and then as you go through, finding the optimal processes and things that will enable and empower your team, right? And then a big key part of that is building the culture around that, helping to ensure that you've got upskilled employees that can support that.
On that point, Jabril, what advice would you give to finance professionals who are looking to either they're at the beginning of that journey or looking to sort of move further up that kind of maturity on a digital journey to increase simplification and transform?
Yeah, I think that's a great question. I think that's taking a step back. I think being able to take a step back and just really taking a look at your own kind of tech stack and your own needs, and being able to really get an understanding of what it is that you're trying to achieve. So I always start with, like, in terms of the vision, start with the end first. So start to think through what outcomes that you're trying to achieve for your team, what outcomes are you trying to achieve in terms of your own processes and things for your organization, and then working backwards from there. And so I always encourage finance teams to just take a little bit of time at the upfront to start thinking through what the vision is, what the outcomes are going to be. And then I think a second step is really getting support around it. I think the other element that you'll also find with finance teams is, like, the role cuts across the organization in a number of different ways. So it's not just getting support internally within your team, but it's also, how is this going to impact sales? How is this going to impact marketing? How is this going to impact other elements of the organization? So, building the support around there from leadership, and then trying to start to build a culture around that, right? And then taking, little micro steps as you go through to be able to get some quick wins and build some support there. So I think it's, start in my mind, it's starting with the outcome, set up the vision, galvanize the support across your team, get some quick wins, and start to build that culture as you continue to progress to what it is that you want to achieve.
Yeah, absolutely. Andy, just think about that in terms of when you're helping clients with this sort of Netgain implementation, I guess, especially through the early stages, or going through looking at what the art of the possible. How are some ways of thinking about that vision? What are some of the successes you've seen in terms of where that vision's best articulated, or the process to arriving at that vision that's compelling, that's going to bring enough stakeholders on the journey with you?
Yeah, absolutely. I think one thing too, and that we talk about, it's exciting when folks are looking to add to their tech stack, but I think we cannot ignore the fact that there is kind of a cost or a learning curve to that. Implementing software is never going to take away 100% of your pain points. We see that a lot with, like, our close management tool. You have to have a close that you are following to leverage a close management tool, right? We can't just throw technology at a pain and say that's going to take it away. So I really like that idea of kind of having the end goal in mind. What in your world would be the perfect solution? And if that's a tech stack or adding something to that, make sure you're doing your due diligence as well. It's kind of counterintuitive, but on the sales cycle, if I have a client who's saying, this is the one thing I'm looking at and I'm just going to write it out, I would encourage you, look at what's in the market, especially with such an exciting time that we have. New things are popping up all the time. Obviously, I'm going to be incredibly biased that I think my tools are the best for you, but maybe there's something I don't know that you really need, and we just don't quite meet that mark. So do your due diligence, take, the sales calls, let them kind of pitch what they're doing, and then sit and say, does this really align with my end goal? Does it affect my accounting team in a positive way? But hey, how is sales going to like this? Or what is this going to do to marketing? Just making sure you're really looking at from start to finish, and knowing that you're going to get a lot of impact and a lot of positivity, but it might take a minute to see that fully pay off for you.
Right. Yeah, no, that makes perfect sense. And Robbie, just sort of expanding on that point a little bit, with your really incredible experience, I guess, at Sony at that time, thinking about the number of different priorities that finance leaders have, and managing those, how do you have any tips for sort of positioning themselves for change so that they're in a place to embrace it most effectively and not be kind of swamped by the amount of that's on coming across their desk and losing the wood for the trees potentially?
Yeah, so it's a really interesting one, because sort of just pick off to Braun here, is just you've got to know what the outcome is from the start. And when I say that, I mean, if you're CFO or finance leader in business, you've got to first, for me, you've got to pick what you want your business engagement philosophy to be. How do you want to engage with the business? How do you want to business partner? How are you going to add value in the organization? Because ultimately that attitude and the way you lead the finance function leads to the way you structure the finance function. Because if you're going with a very business partnering approach, you're going to want to automate as much as possible, and you're going to invest a lot in FP&A and business partnering. It then links into your systems design. Your systems design becomes very, what are the cross-functional systems which are going to have a lot of impact on non-finance users? What are the stuff that's going to be the master data backbones in kind of your sort of tech stack? But it really comes from, how do you want to engage with the business? And I feel like that's a day one question, is as CFO, how am I going to engage with my business? How am I going to drive my business forward? And it really drives the next steps, which is systems and how you structure the finance team.
Yeah, couldn't agree more. Great. So I think I know we were going to sort of move to Q&A at this point. Are there any questions in the chat or anything that any of the listeners want to add through? I'm not seeing any.
The other element I will.
Oh, here we go. So maybe one for you, Jabron, given you were about to answer a different question. Are there any financial processes you would recommend not to automate?
Yeah, and I would say that this, in my view, I think this is going to be very contingent and unique to your business. I think, as you're going through and you're thinking through, what is the outcome? What are the processes that you want to achieve? What is it ultimately that you want to achieve as a business, as a team? I think, it'll be, the answers will be different for every organization. I think it'll differ by size of organization. It'll differ by team. And so I don't think there's a clear cut there, at least in my view. I think it's really taking a step back, really understanding what it is that you're trying to achieve, doing your due diligence, and then working towards, what is context specific to your organization.
Yeah, and I would add to that, maybe it's not so much the process that you wouldn't want to automate, but more of a timing thing. If you have a team of 3, you probably don't need a close management resource, but if you are managing 500 leases, maybe that's something you're looking at, versus just your timing as you grow up. You kind of have to be open to leveraging those new processes. Same with AP, AR management. As you gain customers, as you're doing more transactions, identifying the time and the size of your team, that could be a key metric to pay attention to as well.
Yeah, I mean, instinctively, I'd say there's a cost and benefit analysis you need to do. So, look at the investment of it, and then there's also a yeah, if you're going to spend, you know, weeks and weeks, you know, writing code for something that's not going to have a payback in a relatively short time, given that, you know, business is undergoing so much change, rapid change anyway. You know, but pay close attention to that. But then there's also, you know, just judgmental areas, you know, significant judgments that don't lend themselves to automation, and you wouldn't want them to. But the automation is almost there to free up enough time in the organization so that more time can be spent on those judgmental value-add activities. I don't know, what do you think, Robbie?
I've got one in mind, which is that I'm kind of weighing it up in my mind a little bit, which is budgeting and forecasting. Because the thing is, I want to spend time on that because I want to make my non-finance VPs accountable for stuff, and I want them to talk about the numbers so you build the culture around KPIs. But I suppose that's the add value discussion. But I want to automate the reports being sent out. I want to automate getting the PowerPoint deck, but I don't actually want to write the variance analysis automatically. I kind of want them to write it so that they're accountable for it at the same time. Just, I don't know, I'm sure the finance leaders in the audience, you can think of which functions you trust and don't trust when it comes to managing their budget. I know my colleagues in Payhawk are probably sick of it, but it's always sales versus marketing. Who do you trust less? Marketing are very good at spending money generally, I find, and sales, they never give you an accurate revenue forecast, but probably erodes my business partnering comments earlier in the session. I should probably not tell them this, but
yeah, I think that's a really good point, and you know, that's the judgmental area that I was thinking of as well, and it's yeah, that's the crucial bit where you want to be spending time, and that's where you're really helping the business. Go back to your original point. Great stuff. I think do we have any other questions? Oh, here we go. How do you best prepare your teams for the adoption of new tools? So I think we touched on this a little bit in terms of how to sort of lay the land, but I don't know, Jabron, did you have any thoughts on this?
Yeah, I think for this one, it's very much trying to engage them early on in the process. I think when you're trying to define what is it that you want, and so, you know, as we're going through the process, it could be bringing your team together early on, having initial conversations to identify what the gaps are, what the needs are, what your ultimate vision is, and then, you know, once you get that early engagement, continuing to bring the team along in the journey. I think that does two things. I think one, it helps you identify, you know, as a leader, identify any gaps or areas that you might not have, you know, initially thought of. And I think secondly, you know, brings the team and helps to get their support and their understanding of where things are going, and also helps to build that culture element that we're talking about, right, across the organization. And so I think, you know, early engagement is key, bringing them in from the onset as you go through the process.
Yeah, and I totally agree with that. My favorite calls are when I have everyone from the CFO to maybe a staff accountant on the call, and we're really listening to their needs and listening to what they want, instead of telling them what they want, because like I said, there's a lot of solutions out there and you need to find the one that fits your organization best. So if you're listening to those pain points, that really sets you up for the most successful kind of transition into that tool. I would add one more thing to that, and that is, you know, these tools and these adoptions, they don't happen overnight. So I think where we've seen the best success too is really making sure you allocate time, whether that is a resource at the company, you know, if you're carving out a certain amount of time that someone's going to be able to dedicate to that adoption. Because where you see issues is kind of, you know, the 3 months, 6 months, 9 months, oh man, you've been paying for this for a year and you're still not implemented. You know, there's nothing more frustrating than paying for something you're not using. So if it's something important, make sure that kind of lines up with the resources that you're allocating, just to make sure you can be as successful as possible.
Yeah, and Andy, just maybe I could sort of ask a sort of follow up to that while you're on. I think it's the same point you're making, but maybe not. The next question, and it's been asked, is on numerous tools. So I guess how do you prepare people, and especially in the context of having, you know, multiple tools potentially at the same time.
Yeah, and we see this all the time where someone comes for pain point A and, you know, we say, oh, by the way, we do this as well. And they go, oh man, that would really help us. And so again, what is your main pain point? What is going to be the best return on your time? If you came to us for assets and you noticed we had close, or, you know, was that really what you were looking for? And so that's the first question our implementation team will ask. We'll say, hey, you know, we can implement these at the same time. We don't see it as successful. What is going to be the best use of your time here, so we can really hone in on that. So I would just say, yeah, just kind of like listen to your team. Where are you going to get the best return, and try to focus one at a time. That being said, we do implement across the board multiple tools. It just kind of depends on the situation.
Yeah, I'd imagine that there's times where there'll be a synergy to you know, to doing several at the same time.
Yeah, and if you have a big
times where
team,
obvious.
maybe you have someone who's doing assets, and someone's doing leases, and someone, you know, and they're totally different teams, and you have two resources. It can work great in that instance.
Yeah. So I guess it's careful thinking through and planning of, you know, is there a synergy or is it a dis-synergy?
Yeah,
Robbie, any thoughts on that? Sorry, Andy.
I would say, because as much as I would love everyone to think tech stacks their whole life, I realize you have month-end close and quarterly reporting and financials and budgeting. So just realizing we are not, the world does not revolve around me as much as I wish it did.
I suppose my answer would be the favourite accountant's answer, which is it depends. The way you lead change management is very different in an organisation like Sony versus some of the startups I've worked in. I mean, that's a very obvious comment to make, but this is coming from a man who, when I implemented Payhawk personally in my last organisation, my sales pitch to the employees was, guys, the more receipts we get in, the more VAT we reclaim, the more likely it's a free bar at the Christmas party. There wasn't a huge amount of chatting about the HMRC legislation on what's a simple VAT invoice and what isn't. And I suppose the change management strategy and then the numerous tools element, it's really dependent on how your organization adopts new technology and decisions. And you tend to find startups are going to be much more willing and much more ready for that style of change. Whereas if I do take a Sony, they would have had that process for 10, 15 years, maybe, and they've modified it over time. And that's where the change management approach was a lot more formal, was a lot more proof of concept. Let's do some tests. Let's internal audit that test. So, but yeah, I mean, I think you can tell which change management strategy I prefer and find more fun. But I recognize that you have to do it in different ways depending on your organization. And that's the same in the tech stack, how you build the tech stack. You've got to be very conscious of who your stakeholders are going to be, because most of the time, the reason why a new implementation fails is not actually down to the technology, it's actually down to the people side of it. So that is a key element of any system implementation.
Yeah, completely. So the organization as a whole, and I'd always say, and at what point that organization is in, you know, a transformation journey, or, you know, in a state of flux or changing product, all of those factors.
And how willing is it they've had the same process for 5 years and they don't want to change it really, and they've built loads of workarounds for it already. Yeah, I find there's a lot of organizations that are incredibly resistant to changing a process at all. And that's when you start getting these niggly biases starting to creep in, that protectionism that I think people fear when we talk about AI, when it doesn't need to be. I think Andy's example earlier, it was a real enabler, the adoption of new technology to upskill the finance function. I think that message is the one that I really think can be perpetuated a lot more.
Great. Excellent. Well, I think we haven't got any more questions, and that feels like a good place to maybe draw things to a close. So unless there's any further comments from the panelists.
No, I think just thank you for having us all. Thank you to all the attendees, and we'll also be we've done a recording, and we'll also be sharing that through as well with all of the participants following the call. But thank you all for joining, and you know, I speak for myself, and certainly hopefully for the panelists as well. If you want to reach out on LinkedIn or other ways to connect, you know, please feel free to do so. Happy to connect and talk about any of the issues that we've touched upon today.
Thank you very much.
Thank you, everyone.
Thank you.
Thank you, everyone.
Thanks all. Bye-bye.